But the cost of living over in China rose slightly in December, and it is expected to increase further in the coming months as the country recovers from a shift away from zero COVID. Still, experts say inflation is not a major concern this year for Asia's #1 economy, given its weak domestic demand. CNA's Lo Min tells us more.
Chinese are slowly starting to get a taste of what people around the world have been experiencing for months: inflation. It's not as bad as the UK or US, but the cost of living is creeping up.
China's consumer price index inflation rose modestly by 1.8% year-on-year in December, up from 1.6% in November, in line with analysts' expectations. Food was the main factor driving up prices, going up 4.8% year-on-year in December. But unlike most other major economies where prices have soared on the back of a spike in energy and food costs and supply chain issues, China's inflation remained relatively low due to its weak domestic demand. For the whole of 2022, consumer inflation stood at 2%, below the official target of around 3%. Although China loosened COVID restrictions last month, an outbreak of COVID infections soon swept through most major cities, including Beijing and Shanghai, severely curtailing economic activity, particularly in the services sector. This as people stayed away from public areas for fear of contracting the virus.
The net effect of that has been a pretty mild inflationary impulse over the last year. So in a way, it has worked for China in terms of we're not really grappling with high inflation, supply side inflation drivers. But I think on the demand side, it just means that policymakers have a lot more to do in order to bring inflation up to a healthier level.
Analysts expect inflation to rise to 2% year-on-year this month, mostly due to seasonal patterns in view of the upcoming Spring Festival holiday, a peak travel period for Chinese citizens. Meanwhile, the Producer Price Index, which reflects the prices factories charge wholesalers for products, fell by 0.7% year-on-year in December, up from a fall of 1.3% in November. That's below market estimates of a 0.1% fall.
And that continues to underscore signs that factory operations in China have been somewhat hit by COVID outbreaks in the month. This is also consistent with sort of the PMI activity data that we see earlier in the month, which have shown that activity in terms of new orders have actually contracted in a month. And this is actually the largest contraction we've seen in terms of PMI since the Shanghai lockdowns in April.
The weak number was further exacerbated by falling export growth, which analysts say looks set to continue falling sharply this year due to slowing growth in Europe and US. Still, with China shifting away from zero COVID and opening up its borders, analysts expect economic activity to pick up and inflation to rebound to around 2.4% for the whole of this year. Lo Min, CNA, Shanghai.